Good morning. My name is John Richardson. Today is October the 16th, 2018. I am in Toronto, Canada, a nice fall day, continuing my series of interviews on topics of relevance to Americans abroad. Today I have another particularly interesting guest. Joining me from Tel Aviv, Israel, is Monte Silver, who is very well known, I think, at this point to anybody who also knows something about this Internal Revenue Code Section 965 transition tax, which was sort of slipped into the Tax Cuts and Jobs Act, or should I say the Tax Jobs and Something Act, last December. Monte has been very, very active in public education, public advocacy in relation to this particular tax, and he has also worked tirelessly with U.S. Treasury to try to get the horrible effects of this mitigated with respect to Americans abroad. So, Monte, welcome. Glad to have you here with me today.
Glad to be here, John. We both have a little cup of coffee going on there.
All right, I'll start with a coffee salute to your wonderful efforts. Yeah, you're very, very welcome. You know, it occurs to me that there might be some people out there who don't know anything about this, and I don't want to get this overly technical, but in sort of people talk, what in the world happened in December? What's going on, and why is this so important?
Okay, so what happened is actually something that was quite reasonable. The Googles and Apples of the world and Microsofts, all these big corporations, had these subsidiaries abroad in Israel and in Ireland, particularly in low-tax countries like Ireland. And what Google America did was, because the corporate tax rates in America were so high up until the end of last year, and the tax rates in Ireland were so low, they siphoned all as much as they could out of America into Ireland and other low jurisdiction countries. So these companies were storing $2.5 trillion abroad, and the government was looking for a way to get their hands on it, because these were sort of accounting tricks rather than real substance. There was no reason the money was sitting in Ireland. So the government passed this law called the Transitional Repatriation Tax, which said that all the profits, Google Ireland, that you have been stashing abroad for the last 30 years, since 1986, will be taxed on a one time based on how much you have stashed abroad on December 31st, 2017. And we'll tax you at 15.5% for what you're holding in cash.
Okay.
It turns out...
Yeah, actually, I wonder if I could get you to elaborate on this point a little bit. So my understanding of what's happening, and sort of confirm or not, and if confirmed, perhaps add to it, is that when you say companies like Google and Apple were, I think you used the word stashing profits overseas, these actually were profits that were held inside non-American corporations, that is, foreign corporations, correct?
Yes.
So the idea was that they'd incorporate another company to run their business in the low-tax jurisdiction, and because they were foreign corporations, the U.S. tax code would not have taxed them directly on that income at the time it was earned. Have I got that right?
Yes. A foreign corporation of Google, or even of an individual like me and like you, if we own a corporation abroad, it is generally not taxed on the profits in the United States until that money is distributed to America, to the American shareholder.
So it would be, in tax speak, it would be a method of tax deferral.
Yes, the money that was accumulating in that corporation would not be taxed. The tax would be deferred until the dividends were sent to the U.S.-based shareholder,
to the shareholder,
Google or Apple. Correct.
Yeah. So in some cases, those would be, in the case of Google or Apple, the shareholder of the foreign Google or Apple would actually be Google America, right?
Yeah, Google America.
But in the case of, say, Monte's Legal Services, the shareholder of that is actually Monte, right?
Monte, an
yeah,
individual.
the individual.
So, and here lies the problem. The way that the law was written was that the shareholder of this foreign corporation has to pay this 15.5% tax, regardless if it's a Google Inc., an American corporation, or if it's Monte, who is an American citizen living abroad, an American citizen who happens to be living abroad.
So in other words, the way the law is written, it's essentially forcing you to pay the tax individually on profits earned by the company, even though you never receive those profits from the company. Is that correct?
Yeah, just like with Google and Apple, they were taxed on that money, regardless of whether they brought that money back. So just like them, Monte would be taxed on Monte's one-person corporation. I have a corporation abroad, a controlled foreign corporation, just like Google. My corporation in Israel is a tiny little thing. And I'm subject to the same tax that Google is, even though I don't distribute the money, with one caveat. I pay a higher tax rate than Google does.
Sorry, could you repeat what you just said? You say what? You pay a what?
I pay a higher tax rate than Google. If Google pays 15.5% on cash stored abroad, Monte pays 17.54% on that cash. I pay 13% more.
Absolutely shocking. You're positive of this?
I am positive.
God, how could anything be written in such a crazy way? Could I just ask you one other question? You know, we're talking about these foreign corporations. Like this company that you have, okay, your company pays tax in Israel, doesn't it?
Very high tax. Israel is by no means a low tax jurisdiction.
Neither is Canada, by the way, if anybody's watching. Canada is a very high tax jurisdiction, too. Well, you grew up in Canada, didn't you?
Yeah, Edmonton, Alberta.
Okay.
Go Eskimos.
Well, but that's a lower tax place than Ontario. You haven't seen high taxes, Monte, in Canada till you've lived in Ontario.
Okay.
Yeah, absolutely extraordinary. Okay, so to summarize this, so what you're telling me is, I mean, this sounds just incredible. What you're telling me is that Monte is running a corporation to run his law business, practice through, his law practice through. The company is paying very, very high taxes in Israel.
That's correct.
You didn't pay out all the money in the company, so some of it's left in the company, presumably just to have money to run your business on those bad months, sort of thing, right?
Or I could own this office. The money that I made from a profit can be invested in machinery, or it could be invested in buying this office. So it doesn't have to be cash. Yeah. It can be assets as well that were bought with the profits. It can be both.
So you didn't pay out every bit of profit in the company, and now what they're saying is, Monte, you know what? Even though you didn't pay it out, we're going to treat you as though you'd paid it out and impose a tax on it, even though you've already paid tax on that money in Israel?
Yeah.
Unbelievable. And this is, of course, true for Apple as well. It's interesting to me. A couple of years ago, Ireland allegedly was running a sweet tax deal for Apple, and a number of other countries were upset, and the pressure was on Ireland to raise the taxes that they were charging Apple. And interestingly, the U.S. government was very upset about that, and it strikes me the reason they were upset about it, and this is a little bit of a diversion, was because if they paid those taxes in Ireland, then those taxes that Apple paid in Ireland could be used as a tax credit against money that was coming to the United States. Mm-hmm. So really, the United States viewed the idea of Ireland's imposing taxes on Apple as essentially stealing money from the United States. Amazing sort of thing. So anyway, so when we look at this transition tax in relation to Apple, it's really affecting the parent American company. It's not affecting individual shareholders directly, right?
Doesn't touch the shareholders at all.
But in your case, actually, it helps the shareholders, doesn't it? Because once that money has been deemed to have been included in income, Apple will never pay tax on that again, right?
Well, it helps the shareholders of Google in two major ways, and this was the intent of the law. Number one, there's money now in Google United States, which can be used to pay dividends. And number two, Google will now take that money, invest in the United States, and that will provide jobs and etc.
Bringing those jobs home to America. So where we seem to be so far with this is a great interview. Thank you for this. Okay, where we seem to be is that we've got a law that clearly benefits Apple's and Google's and clearly provides extreme significant hardship, somewhere between difficulty and practically bankruptcy in some cases, I would imagine, extreme hardship to individual people living outside the United States who not only, and this blows my mind, are required to pay a higher rate of tax than Apple or Google, but I read somewhere something to the effect that there are further benefits that Apple and Google would get that Monte would not get. Is that correct?
That is true for guilty. That is true for the second tax of guilty, but for transition tax, by and large, that is the main numerical benefit that they have. Of course, there is this issue that Google and Apple have, 50,000 tax professionals who've been lobbying the government for all these years to make sure that these stuff are worded this way or that way, whereas the average tax person of a small business, even in America and abroad, the same thing applies both to Americans living in America and abroad. These small individuals that have investments abroad through small corporations, little e-commerce, if you're in America, e-commerce businesses, they're dinged, and these rules are so overwhelmingly complex. And these regulations that have come out, the proposed regulations, 250 pages of, I spent dozens of hours, and I would not say this, obviously, if it were not true, I couldn't understand them. And if I can't understand them,
I'm going to hold up my hand too,
subject.
Monte. Yeah, I agree with you. They're absolutely incomprehensible.
You cannot understand them unless you're Baker McKenzie, okay? If you're Baker McKenzie and you're representing Google, you can understand them. No one that deals with individual people like us can understand these things. No.
I mean, I think that's absolutely right. I mean, what strikes me about this is that, first of all, this so-called tax is not based on any realization event. Nothing happened, just there's some money, we want it.
Right.
Secondly, it's far more punitive on individuals like you and other Americans abroad than it is on Google or Apple. And thirdly, I think you're absolutely right. I mean, I fielded calls on this as you obviously have as well, and I think where all of these, the thing that all people share is they can't understand what's even required of them.
No.
So how, Monte, do you file a tax return if you can't even understand what's required, and there's really no way to get professional help? How do you do this?
Well, the quick answer is this. I would say about 33% or 50% of people in my situation just go under the radar and say, goodbye, America, I ain't going to do it because it's going to cost me an arm and a leg, and my tax professional, who can be an enrolled agent, it's not even a CPA in many cases.
I know.
Can't understand this stuff, so they just go under the radar because they're not going to go to Baker McKenzie, this little mom and pop shop. I would if I wasn't a tax. So half of them, or a third to a half, just go under the table, and you and I will never hear of them.
Yeah.
The other half, and I see a lot of them, they file And then they show me their returns when I didn't represent them in filing, and I look at this and I said,
It's not done right.
it's not done right. What have you done? You just did it all wrong.
Oh,
it
that's
happens
right.
to me every day. Yes.
Well, I mean, I'm not a tax preparer, so I don't see the actual, machinery on this, but God knows I've had enough discussions with people. I mean, I agree with you. It is so over the top that a lot of people are almost forced underground on this. I mean, they can't comply because the rules can't be understood. Even if the rules could be understood, they can't afford the help.
Yeah.
And even if they could afford the help, they wouldn't know where to get the help. I mean, that's the other thing that's extraordinary about this. So, you've made these points right from the get-go, and you've done I think a fantastic job with your advocacy, and I want to congratulate you for that. And on behalf of all Americans, I would want to thank you as well, as I'm sure they would. But can you tell me where you are now with Treasury, and specifically, could you talk about the relationship between this transition tax stuff and this Regulatory Flexibility Act stuff? What's happening there?
So after the movement, I call the movement, is people like you, John, and the people you brought, and that Karen in Australia brought to Americans abroad, who said no more, and we're going to do something about this. So the movement got an extension to pay the first payment of the transition tax back in June.
Breaking this down, I want to just pause and break this down because I want, for two reasons. I want people to understand, but I also want to make sure that your efforts are acknowledged here. Okay, so number one, the original filing date was
April
15th, and the first extension that was granted was until June.
June 15th,
on that,
right.
Correct? Okay, so that was, any help is a lot of help. You have no idea, people who are watching, the calls I've had from people, how desperate people are on this. Like, they are desperate. So the first extension, and this comes from Treasury. Remember, Congress makes the laws. Treasury is trying to administer this stuff. It's not their fault, okay? I do think it's Congress's fault, for not, thinking this through very clearly. But so the first extension came to June 15th, and there's no question that Monte was helpful in that. The next extension, I was in Switzerland when I got this news, was what?
June 15th of next year, of 2019. That was a
clutch in.
Very, very hard-fought extension, yes.
Yeah, now this is awesome, because what this was an extension on the first payment on this thing. Of a year. Now, just pausing on payments, one thing we haven't talked about, I'm going to make up a very pedestrian example here, which is probably more right than wrong, but not necessarily right, just for purposes of example. So let's imagine that somebody has $1 million left in a small business corporation, which would not be unusual, because corporations need money to run and fund themselves. Okay. So let's take Monte's example as an individual at 17.54%, so they're going to owe $175,000 as a one-off tax on this. Can you imagine?
Right.
They walk into your house and say, "Give me $175,000." What happened? Did I sell anything? No. Did I get anything? No. Just give me $175,000. Now, in its graciousness and sense of fairness, what Congress wrote into the law is, you got to give us the $175,000. We're going to take it. But you know what? We're going to allow you to pay that over an 8-year period. Okay? But if you miss the first payment, the full amount comes due, right? So it was sort of, trying to encourage compliance in that way. So what happened was that the due date for the first payment, I think, have I got this right, was till June 2019, right?
Initially it was April 15, 2018, and after 2 extensions, we got it to June 15, 2019.
Right. So extension 1 was June 15th, 18. Extension 2 is June 15th, 2019. Now, that provides time to figure out what to do with what probably is, in all the hours I've spent on these issues, all the anguish I've experienced with Americans abroad, probably the single worst example of the abuse of Americans abroad I have ever seen. But we have, I think, a year here now to do something else. Now, in your seminar the other day, you made a distinction between Congress, the law, and Treasury. You're working with Treasury, right? Okay, to get them to do what at this point?
Okay, so it is far easier to work with Treasury because you're dealing with very few people and it's not a political body. Okay, the problem with Treasury is they will say, and they have said from day one, that the law is the law. They cannot change the law. We're on the hook. And if you want to change the law, go to Treasury. They go to Congress. So that's what we dealt with from the beginning. They granted us the 2 extensions by saying, we're not changing the law, we're just extending the time to pay.
Okay, so we're doing what we can. We can't change it, but
Yes.
we're doing what we can. But Monte,
That's
let me
correct.
ask you a question. So Treasury is an administrative body, and there's a whole body of law out there, no pun intended, okay, that deals with administrative bodies. They can't, like, do anything they want, right? I mean, I hope nobody from Treasury is listening, but it is true. They can't do anything they want.
They can, look, okay, so let's answer this as specifically as possible to give your viewers, specifics. Okay, so when Treasury now released this 250-page proposed regulation, I saw it and I said, my God, I can't understand anything. And then I saw something in there called the Regulatory Flexibility Act clause. And
in other
it
words,
said,
what they did was they explained why they didn't have to comply with the Regulatory
Right.
Flexibility
Okay.
Act, right?
Okay, so this answers your question. Can the executive arm, Treasury or FAA, do anything they want? The answer is, by law, no, but in practice, yes. Why? Because there is a law called the Regulatory Flexibility Act, which says as follows: when an agency, including the IRS, issues a regulation that has an impact, including collection of information, impact on small businesses, it has to do, by law, before it issues the initial proposed rule, an extremely elaborate analysis on the impact of this law on small businesses, and it must recommend exemptions or other remedies to small businesses. Why? Because many times these laws are written for the Googles and Apples, because that's where the real money is, but it gets stuck on small businesses, okay? So this law was enacted in 1980 by Carter, and judicial review, meaning that you can file a lawsuit, was added in 1996 by Carter, saying if a federal agency, including Treasury, does not follow this law, meaning doing all the analysis and recommend exemptions for small business, you can file a lawsuit. So, can Treasury do whatever it wants? Legally? No. In effect, yes. Why? Because in the last several years, the GAO, the Governmental Accounting Office, did an analysis chaired by Senator Hatch, the chairman of the Senate Finance Committee, and he found that in 200 regulations of Treasury, they complied with this law 0.5% of the time, and no one has ever challenged them on it. Why? Because we're small businesses. We don't have the money to file lawsuits against Treasury, but the law is very specific, and the relief is very specific. So, to answer your question, the Treasury by law is regulated, but in essence, they are not. Okay, now, so the Regulatory Flexibility Act, again, is a law which protects small businesses,
Would that be you?
from this overreach. Well, in the case of 960, the repatriation tax, it's me, because I have a small business which is subject to this repatriation tax.
It's basically every individual. It's basically every individual, I think, caught up in this thing.
Exactly. Oh, of course.
Yeah.
Because the definition of small business is as long as it's independent and independently owned. I mean, Christ, you can have massive family corporations which are independently owned. So we're all small businesses.
Sure. So in other words, to put it real simple, they didn't do what the law requires them to do in issuing these regulations.
Not by a long shot.
Or a short shot, or any shot. They simply,
no, this is the thing.
it's
Why
worse.
did they get around it? No, John, let me answer this. Why did they get around it? Because there is a clause that if the agency or Treasury certifies that no small businesses are significantly impacted, they don't have to comply. They just have to do an analysis to show that no businesses are affected. They must do an analysis. Here, on June 4th, Mnuchin, Secretary Mnuchin, and I have this in writing, signed the extension, giving us a year delay. Okay? He personally, after getting bombarded with emails, signed the extension saying small businesses get 1 year delay. And then 30 days later, he certifies that there's no small businesses impacted by this law. It just, I mean, by law, that doesn't look too good.
I think that's extremely problematic. I mean, what they're really doing is they're making an improper decision that this particular, they're not subject to the jurisdiction of this act.
Yes, that is correct.
So, from your point of view, at the present time, this is where the advocacy efforts are on this particular issue, right?
That is true.
Okay, I think that makes a lot of sense. All right, and I mean, probably a completely unfair question, but what's your prognosis on this?
Well, those who know me know that I can be a little assertive at times. So I've made my position known to Mnuchin himself and his senior staff quite explicitly. And I said, there's two options, Mr. Secretary Mnuchin, and I address him by Steve. I don't, I'm not embarrassed. We're informal people in Israel. You can either give us a carve-out or an exemption for small businesses, or face the first lawsuit of the Regulatory Flexibility Act that Treasury has ever faced. And this law, Regulatory Flexibility Act, can apply to any agency and go back to laws such as FATCA, PIFIC. So once this gains profile, this lawsuit gains profile, I see a lot of politically minded individuals challenging a bunch of what's happening in today's administration, and valid business organizations challenging a lot of stuff. And I just don't see how Treasury, which is dealing with, this is a flagship rule. This is the Tax Cut Jobs Act. This is not some minor, law of some, cockamamie agency. This is a flagship law of Treasury that has not complied with this law in 99.5% of the time. Does he want to go now and have a lawsuit which is going to get a lot of publicity? So those are the two things he's weighing now. Do I want to give an exemption and have these small businesses just be quiet and go away? Or do I want to challenge this and, do I want to take a risk that I'll be sued? And even though I've seen Monte's analysis, this is what he's thinking in the comment that I submitted in the comment period. The analysis is pretty cut and dry. I don't see a way that he can. I mean, he can't avoid a lawsuit because I can file a lawsuit, and I don't see how he can win this lawsuit.
All right.
So he's kind of in a. He's going to have to make a decision, and I don't think the Treasury wants to face the first RFA lawsuit and the consequences of that to themselves and to other federal agencies. I just don't see that happening.
I imagine that this lawsuit could easily be financed, given the number of people affected. Anyway, Monte, this has been fantastic. And I suggest that we pick this discussion up again down the road.
Yeah.
We've been at this for, good time this morning. And this is fantastic. Thank you so much for joining me. And, send your stuff out all the time. I really admire the work that you continue to do, and please
Thank
keep
you.
on doing it, and we'll pick this up later. Thanks very much, Monte.
Okay, bye-bye.
Bye.